Good morning, everybody, and welcome to today's morning market. So today I'm going to cover the UK GDP revised figures for the final quarter of last year. So we saw the UK economy grow by 0.1% in Q4, and also just give you a little bit of market commentary as well, just around the recent equity market strength that we've seen in the latter part of this week. Okay, everyone, so let's start with markets. And yesterday saw a strong day for equity markets in the UK and Europe. That then fed into Asia overnight, and we've seen equity markets open positively this morning. Why is that? Well, what you're seeing is investors becoming more confident and willing to take risk. You've seen stability start to come through within the banking sector, and also that we're becoming a little bit closer to peak interest rates. But outside of markets, what's been the kind of key data point this morning? And what I wanted to do is to focus in on UK GDP. So as I said earlier, the revised figure for the final quarter of last year came in at 0.1%. The original estimate was UK GDP for the quarter at 0. So that estimate's been revised up. Why is it important? It's important because when we look at the third quarter GDP figure, that was negative, so it was minus 0.1%. If we would have seen a second Q4 negative figure come through, so i.e. 2 quarters of negative GDP growth, then that would have been a technical recession. So what we've seen today is the UK has avoided a technical recession. But let's just dig into those GDP figures overall and really, what has changed? Where has the strength come from? So the strength's come from construction in particular, which was up 1.3%, and also within the services sector, which was up 0.1%. If we just dig into some of the other figures as well, I think interestingly, the household savings ratio increased. So it increased to 9.3% for the final quarter of last year from 8.9% in the previous quarter. And also if we look, the level of GDP, so real GDP in quarter 4 is now estimated to be around about 0.6% below pre-pandemic levels. So that would have been the final quarter of 2019. If we look, real households' disposable income also increased by 1.3% this quarter, and that's after 4 consecutive quarters of negative growth. So what can we take from this? So really the UK has performed strongly, or stronger even, than initially estimated, with the region avoiding a technical recession. Throughout the developed world, recent economic data has generally surprised to the upside, with the global economy in better shape than what many investors, many economists thought it would be late last year. That's everything from me. As always, we will endeavour to keep you informed on all data points, everything that we're thinking about from the investment team's perspective. But good to speak to you, and enjoy your weekend. Thank you.